United Bank for Africa (UBA's) dividend just dropped from 5 naira to 25 kobo, and that's about a 95% cut. And most people are blaming it on the profit drop, which was about 45%. But that's not the full story. In this video, we're going to be looking at the full picture. Welcome to Toyosi's Finance, where we break down money, business, and strategy in simpler terms. First, let's start with what everybody sees on the news: the group profit for the year. The group profit for the year was 404 billion naira in 2025, down from 766 billion in 2024. That's a 47% drop. Earnings per share also dropped from 21 naira 73 to 9 naira 66. But here's the first interesting split. At the group level, profit dropped 47%. At the bank level, the standalone Nigerian entity, profit dropped from 565 billion to 165 billion. That's a 71% drop. So the group actually looks better than the bank because the African subsidiaries are actually doing the heavy lifting. And that matters because under Nigerian company law, dividends are paid from the bank's standalone distributable profits and not from the group's profit. So when you read the group numbers and you feel okay about it, you're wrong because that's not the number that dividend committee is actually looking at. Meanwhile, the balance sheet grew. Total assets 33.2 trillion naira, up from 30.3 trillion. Customer deposits 23.95 trillion, up from 21.57 trillion. So the bank is bigger but earning less. That's the tension that we actually need to unpack. Now let's look at the FX story. There's one line in the income statement that actually explains most of the profit drop, and it's called the net trading and profit exchange income. In 2024, it was a gain of 181 billion naira, while in 2025, it was a loss of 140 billion naira. And that's a swing of 322 billion naira in a single line. And this one line explains 99% of why the earnings actually collapsed. But there's a second FX hit that is actually hiding in the other comprehensive income, the part of the equity statement most people actually skip. UBA has subsidiaries across Africa, Ghana, Kenya, Cameroon, and all reporting in their own currencies. And when those statements are translated to Naira at the year end, there's usually a translation gain or loss. In 2024, there was a profit of 590 billion Naira. 590, yes. Well, in 2025, it was actually just 55 billion, so the translation tailwind essentially disappeared. And this is what most retail investors miss because 2024 was not a normal year for any Nigerian bank. The naira devalued from around 460 naira to over 1500 against the dollar, and most Nigerian banks with foreign assets booked a one-off enormous gain. So when management says foreign exchange losses, they're talking about the trading losses in the P&L and also the translation losses that vanished in the OCI, other comprehensive income. So two-thirds of the profit story is actually about the naira and not the underlying bank. Now let's look at the equity aspect. If you skim the balance sheet, you see that the share capital went from 17 billion to 22 billion, while the share premium went from 98 billion to 482 billion. Combined, that's a 389 billion naira increase. So a person or a reasonable person might be asking what happened. What happened was actually a rights issue. A rights issue is when a company sells new shares to existing shareholders. So basically, the share capital is going to go up, the share premium is also going to go up, but total equity also increases. So UBA actually did a rights issue. If you look at page 183 of its audited financial statements, you see that it did two tranches of rights issues. And the total proceeds from both tranches was actually 389 billion naira of fresh capital from existing shareholders. Its share count also went up from 34.2 billion shares to 44.2 billion shares, which is almost 10 billion new shares and a 29% dilution. And you might be wondering why the rights issue? Well, it's because the CBN, which is the Central Bank of Nigeria, actually announced a minimum capital requirements for banks. And for an international bank like UBA, the minimum capital was 500 billion naira. And crucially, the 500 billion naira had to be only share capital plus share premium. So no retained earnings, no reserves. It has to be fresh paid up capital from shareholders. If you look at UBA's starting point before the raise was done, it was 115.8 billion naira. They were 384 billion naira short. So they ran a two-tranche capital raise to close the gap. So after both tranches, share capital plus premium is 504.7 billion. So they just cleared the line by less than 5 billion naira. So let's do a math on a 3 naira final dividend. So UBA has 44.2 billion shares in issue. At 3 naira, that's 44.2 billion times 3 naira. That equals 136.2 billion naira. That's the check UBA would have had to write. As we mentioned earlier, The dividend has to be paid from the standalone bank's distributable profits. So the bank's profit was 165 billion for the year. So a 3 naira dividend would have been 80% of the entire bank's profit. So here are four reasons the bank actually cut dividends. The first, the most dominant reason is actually the CBN capital flow. The bank has to demonstrate that it's building and not draining regulatory capital during a live rights issue. And every naira of dividend actually leaves retained earnings, which leaves CET1. Mid recap, you probably don't want to do that. Also, the bank level distributable profit actually collapsed. In 2025, the bank's profit was 165 billion, down from 565 billion in the previous year. So without even the regulators, you probably don't want to pay dividend from such a small profit. Charge from credit losses on loan actually went from 217 billion to 231 billion, a 51% increase. And when a bank is building loan provisions aggressively, that's signaling caution about the macro, and conserving capital is part of that signal. And lastly, cost growth actually outpaced revenue growth. You can see that interest income grew 4%, while interest expense actually grew by 21%. And also, employees' benefit grew by 19%, while depreciation grew by 27%. So the 25 kobo interim dividend that was actually paid was intentional. It's small enough not to alarm the regulators, but also big enough to maintain its dividend paying status with institutional investors. One key takeaway you should note as an investor or as an analyst is that the dilution is permanent. UBA's share count is now 29% larger, so even if revenue recovers fully to 2024 levels, EPS or earnings per share would not recover because the denominator is now predominantly larger, which is the real long-term cost of the CBN recap. Thank you for watching this video. If you found it useful, share with a friend and also follow at Toyosi's Finance. Goodbye.